Hello, I'm James Preston for Kalkine Media and welcome to another edition of Executive Corner Expert Talks. In this edition, I'll be sitting down with Vishnu Varathan, the head economist and strategist at Mizuho Bank, to analyse the impact of the Russia-Ukraine crisis and its impact on markets. Vishnu, thanks so much for joining us today.
My pleasure. Thanks for having me on.
Now, Vishnu, this is obviously something that you are following quite closely. Before we get into the economic impact, for those who might be unaware of how things are unfolding, what are the latest developments with the conflict?
Well, it appears that, of course, we've seen, a human tragedy unfolding. We've seen, huge displacement of Ukrainians from out of the country as the attack intensifies. The latest is Russia appears to have offered an olive branch, but that's all illusory because the demands made on Ukraine are quite onerous and not easy for Ukraine to concede because they would have to concede territory and they would have to stop their military action in exchange for Russian ceasefire. So it appears that the Russian invasion and attacks, at least for the time being, are going to continue, and that's going to cause more devastation, both of lives, property, and just the society as a whole.
Absolutely. I mean, it's just a terrible situation. I think we all thought we were past these kind of conflicts occurring, certainly in Europe. I mean, it's been obviously since the end of World War II since we've seen anything quite like this in that region, for sure. We're also seeing world stock markets going down as a consequence of this current conflict. In your opinion, what ways will stocks and other commodities be affected in the long term?
Well, yeah, I mean, the long-term question is a good one because, we are struggling just to look past our noses at this point of time. What we immediately see, of course, is the world is bracing itself for a huge supply shock in terms of, huge commodities and energy where Russia is big. And let's not forget, Ukraine is also a big exporter of very key commodities that not just go into, just the generalized industries, but also in the green technology areas, so on and so forth. Meanwhile, I think equities are dealing with the reality of staring down the barrel of stagflation. And this is why you're seeing a huge sell-off. I think the longer-term aspect of this could mean that we could have some permanent cost shifts that would make the transition to green technologies a lot more expensive, given key minerals, key metals such as nickel for batteries, and a wider range of goods start to suffer. And also in the near term, this also means to offset for Russian energy dependence. A lot of the economies, European economies, as well as global economies, because of the cascading effect, they might have to then restart their own production and extract process. And here is going to be the US, where they probably have to some degree at least, incentivize shale production to offset the move away from energy.
Obviously, there's a bunch of sanctions currently being impacted on Russia at the moment. And we're trying to get them, I suppose, to come to the table and pull out of Ukraine for that occurrence. Basically, that's what the sanctions are meaning. Could we potentially see moving forward a complete trade embargo from pretty much every other country just refusing to do any sort of trade with Russia? Is that on the table?
If you asked me this 2 weeks ago, I would have said probably not. But we've been caught on the wrong foot on many things, starting with the invasion itself. So nothing is off the table, even though I think Germany has decided not to go ahead with a fuel embargo or an oil embargo at this point of time. That's still not off the table, and we know for a fact that embargoes can easily widen. And as you rightly point out, a more comprehensive trade embargo could certainly be a risk that we need to deal with, at least for a period of time. The bigger risk here, though, is between incentivizing Russia to come to the table and a miscalculation that ends in Russia being painted into a corner and taking steps that we much rather they not. I think that's the miscalculation risk that we're most worried about at this point in time.
Now, Russia is also a significant exporter of wheat, corn, oil and gas and a bunch of other necessities too. So how do other countries cope with the sudden hindrances caused in the supply chain of those products and other ones?
Well, the short answer is with great difficulty. I think there are no easy ways around this, and at the end of the day, it comes down to trade-offs. So I think consumers in around the world will have to be prepared to pay a lot more for these, because surely we can ramp up production at other places, but the price shocks and the supply shocks cannot be completely outproduced at this point of time. So really, it's not a matter of not feeling the impact. I think necessarily we will feel it. The question then is, how long do the cost shocks last, and how effectively we can work around these. Inevitably, though, and invariably, I think this is going to lead to very suboptimal outcomes in policy, because we will have much higher inflation and much lower growth.
Now, there's also significant pipelines through Ukraine that connect to Russia. Is there the potential that Ukraine could, for example, opt to cut off supply for these oil and gas pipelines? And if they did, what impact would that have for Russia and the world at large?
I think, it is tempting to say that, if Ukraine could then hold Russia ransom or sabotage Russia's oil pipelines, that may be a great deterrent to Russia. But the reality of this is that with embargoes on the table, attacking these pipelines is actually going to affect Europe a lot more, because Europe is highly dependent on these pipelines. And that's exactly where it's headed. It's headed to places like Germany and the rest of the West Europe that rely on Russian energy. And at the end, and really it's just going to add to costs. And Ukraine may not get the desired outcome in any case. So perhaps that's not front and center of the options that would be desirable for any party involved.
Now, one thing I saw just before we've gone to air today is that there were reports circulating that potentially Russia's oligarchs and their government are looking to implement a case of any single website attached to a business or a big company has to now have the domain of .ru instead of having .com or anything like that. They're trying to basically create an internal internet system, essentially, that just exists within Russia. I'm wondering if you know much more about that and what impacts that might have, if it does indeed eventuate, on, I suppose, global trade. Because it's one thing, of course, to have gas and oil, which are physical properties, but there's so much trade and so many things that occur in a digital realm as well these days.
No, that's a really good point. And whether I know more about this, I think I'll, full disclosure here, my knowledge on this matter is sparse. Speculation can be higher, though. And the thing that we've learned is usually closing off an economy, whether it's the tangible aspect of it or the digital aspect of it. History tells us that this does not lead to good outcomes, and that's mainly for the economy that closes off. So I think Russia already feels the impact of financial isolation. Digital isolation may be great for propaganda, but not great for productivity. And I think that's the risk that Russia runs if indeed they go ahead with these steps in the fashion that we imagine.
Yeah, it could be a long way back, that's for sure. I mean, we saw with the fall of the Soviet Union in 1991 that it took pretty much 3 decades for Russia to rebuild its economic stability. So, in your opinion, how will the Russian economy be impacted in the upcoming years as a result of this conflict?
I think Russia would be impacted very, very adversely for two reasons. One is we did see after the annexation of Crimea that the Russian economy did suffer. Their output loss was evident for all to see. Some of this was, of course, the post-2014 collapse in oil prices, but equally, the initial sanctions placed on Russia did have some impact. And given that the sanctions this time around are a lot harsher, we anticipate that this can, take away from the Russian economy in the immediate following years by anywhere between 10 to 20% in terms of their output. The more strategic view on this is that this would drive Russia into the arms of its alliances, for example, China. And that also necessarily means that Russia's reliance on fewer economies gives it less space to maneuver later on. So it may become a hostage of its own doing if indeed Russia continues on the current path. So both in terms of immediate output and strategic outcomes, this doesn't bode very well for Russia.
Well, Vishnu, it's been great to hear your insights today. Just before I let you go, is there any final thoughts you'd like to share with us today?
well, I don't have any wisdom as such, but the situation continues to evolve, and I think the one thing we've learned is most assumptions that we've made do not hold for very long. So that's really the volatility around the situation.
Absolutely. I think the only certainty is uncertainty at this point. That's probably a pretty good way to sum it up. Vishnu, thank you so much for your time today.
My pleasure. Thank you for having me.
That's Vishnu Varathan, the head economist and strategist at Mizuho Bank. And if you missed any part of that chat, you can catch the whole interview on Kalkai Media's YouTube channel. So make sure to subscribe. I'm James, reminding you to stay apprised and invest wise.